Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Tuesday, July 2nd, 2013. Well, a continuation of the trend to the downside today, a candle that's made a higher high but a lower low. And if we look at all of this sequence through here, the trend hasn't actually changed since the 25th of June. Prior to that, here we had the uptrend in place, and then the change of trend to the downside. We had an inside day, outside day, inside day, outside day. And basically the inside days and outside days don't change the trend. Therefore, technically, that trend has remained down all the way through there. And what does it tell you when we have consecutive inside days or alternate inside days, outside days, one after the other? It says something about indecisiveness in the market. It says that one day the buyers aren't strong enough to take out the high and the sellers aren't strong enough to take out the low. The next day they are strong enough to take it out, and or either side is strong enough to take out the extremes of the previous candle. And it does suggest that there is quite a volatile trading period that the market is going through at the moment. Now, we tend to see fairly volatile trading periods at the end of trends, and that does suggest, because of this volatility that we're seeing in the market, that there could be a change of trend back up to the upside. If we look at this trading down through here in this first time frame downtrend and then the second time frame downtrend with this small peak and trough here, it has moved very, very efficiently with some very solid black body candles, and now we're getting this congestion in the market at the moment. Now, this congestion that we're seeing in the market is forming a pattern. It is very difficult to define this type of pattern. I've been quite liberal with my drawing of it here, and it's resembling something of a megaphone type pattern, which tend to be tops, or you could call it an inverse triangle. And the problem with these patterns is that you really don't know when the market is actually broken out or above or below the barriers, because that barrier could actually shift. We could go on to make another higher peak and then make another lower trough. So and that's because of the volatility in the market. So very hard to trade these type of patterns. But the essential thing here is that the market is basically congesting. There has been an end to this very efficient downtrend. And while the market is congesting here, it means that there is either accumulation taking place or distribution. So let's wait for a breakout in either direction. Now, I suggest that the essential areas to the breakout aren't necessarily those barriers that I drew, but I think to the upside here, the 130.79 area seems to be rather important. Here previously it was some resistance, then support in the recent past, and then resistance in the last few days here. The support here down at 129.68, which is a previous important area, has held for today's trading and will be important. So if we see a solid bullish close up above the 130.79 level, we could see the market appreciate, bearing in mind that there is solid resistance above there. We have the Kijun-sen and Tenkan-sen trading above there and the 131.45 level. But a solid bearish close down below the 129.68 level and below the bottom of the cloud could quickly see this market trading down to the 128.57 level, and it could happen quite quickly in line with this previous strong downtrend that we had prior to this volatile congestion that's happening in the market at the moment. Now, in terms of this current candle, very solid bearishness. So a very large black body candle. The sellers have made a significant amount of net bearish progress on the day between the open and the close, and that is in contrast to the previous three candles where we had small bodied candles within this congestion area. And that may be suggesting that the market may have found, or the sellers may have found, some solid downside momentum and actually closed down below the 129.68 level. So let's be on the lookout for that to occur. The sellers have closed with control of this market, and they have been strongly committed to this market as the market tested to the 130.79 level and was strongly rejected from there. So obviously that 129.68 level where the market tested to will be crucial to this market. In terms of the Fibonacci extension, the market technically is still in a downtrend, and today we have tested to the 50% level. It is a significant level. There is potential for the market to bounce from here, but we aren't seeing any signs of that with the sellers firmly in control. So with a possibility of that happening, but not a strong possibility of a change of trend back to the upside at the moment. In terms of the Fibonacci retracement, we are in an expansive mode of that. The market has been flirting with the 161.8% level in the recent past. For the previous 4 candles consecutively trading to that level and being rejected from there. Today we've closed in a solid bearish manner down below there. That does suggest that there is good potential for the market to test down to the 261.8% level at 129.13. So if we do see solid bearish activity down below the cloud and below the current low, then we could quickly trade down to there. Now, in terms of Ichimoku, obviously a neutral market in the long-term time frame, and this could herald quite a change of sentiment in the market. Previously, we saw a strong bullish breakout up above the cloud, giving us a bullish market. We've seen the market testing now and retracing back down towards the cloud, finding support at the top of the cloud for the previous 4 trading days. Now, the market is trading within the cloud, changing that overall sentiment in that long-term time frame to neutral. The market is finding support within the cloud and at the bottom of the cloud here, so it is crucial to this market moving forward. But we do have a very narrow area of the cloud here that the market is trading in, and that suggests that the amount of support that we will see there may be quite weak, and it could be ineffective if the bearishness that we've seen build in this candle continues for tomorrow's trading. So what we will be looking for is a bearish breakout down below the cloud to give us a bearish market in big picture terms and strongly change the overall sentiment in this market back to being negative. In terms of the other Ichimoku indicators, the market is trading down below the Kijun-sen, so we have a bearish market in that medium-term time frame, and the market's also trading down below the Tenkan-sen, the green line here, so bearish in that fast-term time frame. In terms of the Kijun-sen, that has been pointing flat for the past few trading days, and price action has attempted to move back towards there and has been held up at the barrier at 130.79 and has been rejected from there. And this is also suggesting that the market is not going to find the equilibrium up around there, that the sentiment now is swinging back to the sellers. The Tenkan-sen here is pointing down quite sharply, and that's reflecting this solid downside momentum that we're seeing in that fast-term time frame at the moment, and that's also suggesting that the market may break out down below the bottom of the cloud and the 129.68 level. Technically, as this current candle is trading, and trading hasn't finished in that candle, we have seen a crossover of the Tenkan-sen below the Kijun-sen, but remember that candle hasn't completed yet, so we can't take that as being a signal yet. That is a bearish signal if it does occur, and if the signal does remain when the trading has finished and completed tomorrow. But we have to bear in mind that it has occurred above the cloud, so it is a weak signal. But considering that we have a thin amount of cloud, if we do see a bearish breakout down below the cloud, it will suggest that that has been a good signal, and there's potential for the market to trade to lower levels. So essentially for tomorrow's trading, let's watch the area around 129.68 and just below. Watch the area around the top of the cloud, around the 130 level roughly, and then 130.25 level of resistance may come into play, and then up above the 130.79. But it certainly does look at the moment as though the likelihood would be a breakout down to the downside. But let's not preempt the market. Let's wait for confirmation of that to occur.